Hello everyone. Good evening to all of you. So I'm sorry for the disturbance, guys. I think there was some technical issue. It's now resolved. I think that now you can hear me, right? Everything is fine. Okay guys, let's start the session. So the agenda will be, we'll be discussing about 30 MCQ questions. We'll be also discussing about the concepts behind these questions. Okay, so the first question for today is, as per the Companies Act, when are the directors required to make disclosure of their interest? When the directors are required to make the disclosure of their interest? Any idea? When are the directors required to make the disclosure of their interest? Let's suppose there are some interested directors. So they need to disclose their interest at every board meeting, at the first board meeting of every financial year, or at the first board meeting in which he participates as a director. Or option both A and C, option E, B and C. The correct choice here will be option E, both B and C. Okay. So at the time of the first board meeting in every financial year, and at the time of first meeting of the board in which he is participating as a director, option E will be the correct choice. Both B and C are correct here. Okay. Both B and C are correct here. Next, under the Companies Act, a company may advance any loan or give any guarantee or provide any security in connection with any loan taken by any person in whom any of the director of the company is interested if, option A, a special resolution is passed by the company in the general meeting. Option B, ordinary resolution is passed by the company in the general meeting. Option C, the loans are utilized by the borrowing company for its principal business activity. Option D, both A and C. Option E, both B and C. Option D, both A and C. Okay, so a special resolution is required in the general meeting, plus loans are utilized by the borrowing company for the principal business activity only and not any other business activity. Okay, principal business activity only. Next question, the provisions relating to the loans to the directors under the Companies Act shall not apply to, option A, giving of any loans to a managing or whole-time director pursuant to any scheme approved by members by ordinary resolution. Option B, loans made by a holding company to its wholly owned subsidiary company or guarantee or security provided by a holding company. Option C, a company in which the ordinary course of the business provides loans and guarantees or securities for the repayment of any loan. Option D, both A and C. Option E, both B and C. The provision related to loans and advances to directors will not be applicable in which scenario? Option E, both B and C. Okay, so in both B and C cases, this particular section, loan to directors, won't be applied because it's coming in the non-applicability of this section. Okay, next one, according to the Companies Act, what is the time period within which an appeal is required to be filed before the AT shall be dealt with and disposed of by it? Within 60 days of date of presentation, within 30 days, 45 days, 3 months, or 120 days? What is the time period within which an appeal is to be dealt with and to be disposed of by the appellate tribunal? Option D, 3 months from the date of presentation. So okay, so as per section 422 of the Companies Act, every appeal filed before the AT must be disposed of within 3 months from the date of its presentation. Okay, the correct choice here will be option D, 3 months. As per the Companies Act, a private company means a company that, option A, prohibits any kind of invitation to the public to subscribe for any securities of the company. Option B, has a minimum paid up share capital of 1 lakh rupee as may be prescribed. Option C, by its articles limit the number of its member to 200. Option D, all A, B and C. Or option C, only A and B. What are the characteristics of a private company here as per the given options? The correct choice is option A, prohibit the invitation to the public to subscribe for any securities. We all know that a private company cannot issue the shares to the general public, right? So here the correct option is option A. Next one. A related party with respect to a company under the Companies Act means option A, a director or his relative. Option B, a public company in which the director or a manager is a director or holds along with his relative more than 2% of the paid up share capital. Option C, any person on whose advice, direction or instruction a director or a manager is accustomed to act. All A, B and C, or both A and B. So options like these guys can be confusing in the examination. Okay, so you need to have good understanding on some of the provisions that are very, very important. The correct choice here is option D, all A, B and C. Okay, all A, B and C, these will be related parties. These are my related parties as per the Companies Act. A very simple question. Which company means a company not having any limit on the liability of its members under the Companies Act? Here are the options in front of you. Which company is not having any limit on the liability of the members under the Companies Act? Yes, that's straight. Unlimited company. Okay. Unlimited company is the correct choice. Option A. A very simple, a very straight question. Sometimes इस तरह के question भी आ जाते हैं exam में. Next is, which of the following statement are correct relating to the nature of the shares or debentures of a company? Movable property, freely transferable, transfer restricted by the articles of association. Option D, both A and B. Option E, all of the above. What should be the correct choice here? The correct answer here is option D, both A and B. They are freely transferable. That's why we call it as a movable property. The transfer cannot be restricted by articles of association. Okay, so do remember, the transfer cannot be restricted by the articles of association. Option D is the correct choice here. A certificate of shares issued by the company should be signed by 2 directors or a company secretary. Option B, issued under the common seal, if any, of the company. Option C, signed by 2 directors or by a director and a company secretary wherever the company has appointed a company secretary. Either option A or B, either option B or C. So the complex part in these kind of questions are, these questions are very, very simple, but these options, either B and C, either B and C and either B and A, makes it complicated, right? The correct choice here is option E, either B and C, okay? So it is issued under the common seal. ये definitely अगर आप certificate issue कर रहे हो तो आप common seal के अंदर issue करोगे. Plus they are signed by at least 2 directors or by a director and a company secretary wherever applicable. जहाँ पे भी company secretary होती है वहाँ पे company secretary और director कर सकते हैं या फिर 2 director कर सकते हैं. A company shall not capitalize its profit or reserves for the purpose of issuing fully paid up bonus shares until and unless authorized by MOA. Option A. Partly paid up shares, if any outstanding on the date of allotment, are required to be made fully paid up. Option B. Option C. On recommendation of the board, authorized in the general meeting by the company. Option D. Both B and C. Option E. A, B and C. B and C, okay? Only B and C. The company shall not capitalize its profit or reserve for the purpose of issuing fully paid up bonus share. Authorization जो होती है वो हमेशा AOA के अंदर होती है. Why? Because AOA is having all the rules and regulations, internal rules and regulations of the company. MOA is the charter of the company, okay? Rules and regulation कभी भी MOA में नहीं आते. They are always in AOA. That's why option A हो नहीं सकता. So it can be both B and C. Partly paid up नहीं होने चाहिए. They should not be partly paid up. Plus recommendation होना चाहिए बोर्ड का और authorization होना चाहिए जनरल मीटिंग में, okay? So यहाँ से आपका option A eliminate हो जाएगा. Why? Because rules and regulations are always a part of AOA and never a part of memorandum of association. They are always a part of articles of association, okay? Next question. A special resolution authorizing the issue of sweat equity shares shall be valid for making the allotment within a period of what time? 15 months? Not less than 12 months from the date of passing the special resolution. Not more than 12 months from the date of passing of the special resolution. Can be more than 12 months from the date of passing SR if approved by central government. Can be more than 12 months from the date of passing SR if approved by the registrar of companies. Option C, not more than 12 months from the date of passing of the special resolution. Very good. Option C is the correct choice, okay? Not more than 12 months from the date of passing of the special resolution. A very simple question, which means that part of the capital which is for the time being subscribed by the members of the company. Paid up, approved, allocated, subscribed, or subscription capital. A very simple, a very direct question, and sometimes in the examination you will be getting some questions like this as well. 2-3 questions you will be definitely getting like this in multiple subjects, whether it's commerce or accounts or maybe company law or any other subject. So few questions will be totally direct, okay? The correct choice here is option D, subscribed capital, okay? Subscribed capital is the correct choice here. Option D. The notice of the meeting at which the special resolution is proposed to be passed, authorizing the buyback, shall be accompanied by an explanatory statement stating what? We are talking about the notice of the meeting at which the special resolution is proposed to be passed, authorizing the buyback. So here we are authorizing the buyback of the shares, right? It needs to be accompanied by what kind of explanatory statement? Their options are in front of you guys. E, all of the above. Okay, amount to be invested should be mentioned, time limit should be mentioned, by what time you will be able to complete it, the buyback, disclosure of all the material facts, and class of securities to be purchased. Each and everything is required here. Okay, option E here is correct. Where debentures are issued by a company, the company shall create a debenture redemption reserve account. Options: option A, out of the profit of the company available for payment of dividend. Option B, amount credited may be utilized by the company for such use as the BOD may decide. Option E, amount credited shall not be utilized by the company except for the redemption of debentures. Option D, both A and B. Option E, both A and C. The correct choice is both A and C. Okay, out of the profits of the company, I can create debenture redemption reserve out of the profits of the company, and that amount should not be utilized by the company except for the purpose of redemption of debentures. I cannot use that particular amount for any other purpose. Why? Because the specific purpose was redemption of debentures. Okay, that's the specific purpose. Option E here is the correct choice. Next is, no company shall issue a prospectus or make an offer or invitation to the public or its member dash for subscription of its debenture unless the company has before such an issue appointed one or more debenture trustee. What should be the correct option here, which can fill the blank here to make this statement correct? The correct option here will be option B, exceeding 500. Okay, exceeding 500 is the correct choice here, option B. Then one or more debenture trustee can also be appointed. Okay, which of the following statement regarding the reduction of share capital by a company limited by shares or limited by guarantee is true? Option A, company can reduce its share capital without any approval. Reduction of share capital can only be done by ordinary resolution. Share capital reduction can only be initiated by shareholders. Option D, share capital reduction must be approved by the registrar of companies. Option E, reduction of the share capital requires confirmation by the tribunal upon application by the company and a special resolution. Option E, yes, Sachin and Weber, that's correct. Option E, reduction of share capital can only be done after confirming with the tribunal upon the application by the company, and a special resolution is must in this particular case. According to the Companies Act, what section, what action is required for a company after its buyback of its own share or specified security? Let's suppose I have done a buyback of a security. Now, what action is required after that buyback? What do you think? What action is required? Here are 5 actions. You need to identify the correct one that we need to make once we are done with the buyback. Option C, you need to physically destroy the shares of security within 7 days of the completion of the buyback, okay? Because the shares are no more, we have already bought back the shares. Now they need to be destructed. Next, which of the following statement regarding the dividend is correct here? Which of the following statement regarding dividend is correct here? Dividends are only paid annually to the shareholders. Dividends are payments to be made by the company to its creditors. Dividends include any interim dividends declared by the company. Dividends are payment made by shareholder to the company. None of the above. Which statement is correct here, guys? Option C is correct, okay? Dividends includes any kind of interim dividend declared by the company, okay? Option C is correct. Rest of the statements are not correct. Who is responsible for auditing the accounts of the Investor Education and Protection Fund? There is a IEPFA account, right? Investor Education and Protection Fund. So who is responsible? Which entity is responsible for auditing this particular fund? What do you think? The CAG of India, okay? C&AG of India is responsible for conducting the audit of the Investor Education and Protection Fund. Please do remember this, okay? Next one. What is the definition of a qualified institutional buyer as per the Companies Act? Definition of QIB, qualified institutional buyer. As per the Companies Act, what is the definition of qualified institutional buyer? Basically, these are the buyers who are big institutions, again, who are in turn very well qualified in the capital market, who understand the capital market very well. That's why we call it them as qualified institutional buyers. Option E here is correct. A buyer meeting the criteria specified by SEBI Act. So what are QIBs? They are mentioned under the SEBI Act. That's why Companies Act is directly taking a reference of the Companies Act is directly taking the reference of SEBI Act. What happens if no auditor is appointed or reappointed at the annual general meeting? What happens if no auditor is appointed or reappointed at any annual general meeting? Let's suppose this is my annual general meeting. I haven't appointed any auditor. What will happen in that case? What will happen in that case? The existing auditor will continue to serve the auditor for the company, okay? In case no auditor is appointed or reappointed, the existing auditor will go on and carry the work. Okay, that's the provision as per Companies Act. And this question can be very, very important for your examination. Which of the following statement regarding the appointment of director in a company is accurate? You need to find out the accurate or the correct statement here from the 5 statements given below. Just have a quick look and tell me which one is the accurate statement here. Which one will be the correct statement here? The correct statement here is option C. A company can appoint even more than 15 directors, but only after passing a special resolution. A special resolution is required. This is in accordance with section 149 subsection 1 clause B of the Companies Act. As per section 139, how are the appointments, including the filing of the casual vacancy of an auditor, made when a company is required to constitute an audit committee under section 177? If I need to make an audit committee under section 177, we just discussed the criteria of the companies on which the criteria of audit committee is applicable yesterday only in our session. What will happen if I need to constitute an audit committee? In that case, what will happen? It's a very simple question. In that case, appointments are made by the, after taking into account the recommendation of the audit committee, right? Whatever appointments we are making of the auditor, we'll be taking into consideration the opinion and the recommendations of the audit committee only. That's why we have formed it. Okay. Option E will be the correct choice. It is the charter of the company, a document that defines the area within which the company can operate. The first step in the formation of a company is to prepare this particular document. What is the name of the document? It is also called as charter of the company. The first step of forming, if we are forming a company, this is the first step that we need to do. A very simple question, a very direct question. बहुत ही straight question. The correct answer here is MOA or AOA. What do you think? AOA means Articles of Association. MOA means Memorandum of Association. Articles of Association means internal rules and regulations of a company. MOA is actually the charter of the company, in which it is clearly defined that the areas in which the company can operate. Okay, because I define the business activity and everything in my Memorandum of Association. So here option E here will be the correct choice. Whenever you hear the word charter of a company, it is always Memorandum of Association. Okay, yes. As per section 2 subsection 56, Memorandum of Association defines Memorandum of Association as a foundational charter outlining the company's objectives, power, scope of operations. Okay, so please do remember this particular concept. Okay, this is again important. Next, notice relating to the appointment of an auditor shall be filed with the registrar within how many days of the meeting in which the auditor is appointed. Let's suppose we have appointed the auditor. Now, in how many days I need to send a notice to the registrar? $15 days. Okay, 15 days as per section 139 requires company to notify the registrar of an auditor's appointment within 15 days of the meeting where the appointment occurs. Okay, next one. Which term defines the dividend declared by XYZ Limited at its annual general meeting for the financial year 22-23 set at 10%? This is a statement. XYZ company has declared the dividend at its annual general meeting for the financial year 2023 at 10%. What kind of dividend is this, guys? Interim, final, preferential, general, or none of these? What is the type of dividend which we can see in the statement? Any opinion? What is an interim dividend? What is the difference between interim dividend and final dividend? Let's suppose this is my financial year 22-23. I have declared dividend in the quarter 1. I have declared dividend in the quarter 4. These dividends are interim dividends. If I am declaring a dividend at the annual general meeting for the whole financial year, this will be always a final dividend. Okay, this will be always a final dividend. Whenever you are declaring a dividend at the annual general meeting for the whole financial year, that is called as a final dividend. Okay, interim dividend मतलब साल के बीच में कोई dividend दिया उसको interim बोलते हैं. Okay, so option B here is the correct choice. Yes. The articles of the company may confer on the board the power to appoint any person other than someone who failed to be appointed as a director in the general meeting as an additional director at any time who shall hold office. So basically they have asked you guys the tenure of the additional director. Tenure of the additional director. What should be the tenure of the additional director? Option C, either A and B, whichever is earlier. Okay, up to the date of the next annual general meeting. So the date of next annual general meeting or till the last date on which the general meeting should have been held. Right? So मान लो A point के हिसाब से जनरल मीटिंग आज होनी चाहिए थी, आज नहीं हुई तो भी कोई बात नहीं, आज हो जानी चाहिए थी is also fine. Okay. So up to the date of annual general meeting, next year's annual general meeting, or till the last date on which the annual general meeting should have held. जब प्रपोज थी तब भी नहीं हो रहा है तो लास्ट टेन्योर हो जाएगा. ओके, सो ऑप्शन सी हियर इज द करेक्ट चॉइस ऑफ एडिशनल डायरेक्टर. In compliance with the provisions of this act, how should a director of a company conduct themselves? In alignment with the company's memorandum, in accordance with shareholders' preference, in line with company's policy, in adherence to the articles of the company, in accordance with the company's mission statement. How the directors should conduct their day-to-day activity, their business. How do the directors discharge their duties basically? Option D, in adherence to the articles of the company. Okay, so all the rules and regulations are stated in the articles of association of the company. So company policies are also mentioned in the articles of association only. So broadly we can always say articles of association because all the company policies and everything related to the roles and responsibilities will be mentioned there. Okay. Next is, which of the following statement regarding the director's office assignment is true? So they have given you the 5 statements here. You need to find out which statement is true regarding the director's office assignment. Regarding the director's office assignment. Correct choice here is option C. Okay, option C here is the correct choice. Office assignment is strictly prohibited and any such assignment is void. Okay, you cannot assign your office to someone else. You need to discharge the duties on your own only, so that is void as per the Companies Act. Okay, in accordance with the company's regulations, how should a director conduct themselves? So I think this particular question is repeated, right? This particular question is repeated. Apologies for that. Let's take the next one. In the context of sweat equity shares, what is the relationship between these shares and the equity share holders? We are talking here in the context of the sweat equity shares issued under the Companies Act. What is the relationship between these shares? Between these shares and the equity shares? So I'm having equity. I'm also having sweat equity. What is the relationship between these two? Are they same, or they are having different rights and privileges or obligations? Option A, sweat equity shares have new rights and privileges as compared to the equity shares. Option B, sweat shares have fewer rights and privileges. C, sweat shares are entirely distinct from the equity shares. Option D, sweat equity shares are having the same rights, limitations and provisions as applicable to the equity, and the holders of the sweat equity shares rank equally with the equity holders. Or option E, sweat equity shares have no rights or provisions associated with them. The correct choice here will be option D. Okay, they are treated at par with equity. Sweat equity shares are treated at par at equity. They are nothing but equity only. So option D here is the correct choice. Next and the last question for today. All the monies received on the application from the public for subscription to these securities shall be kept in a separate bank account and shall not be utilized for the purpose other than what? So options are in front of you. Let me know later on in the comment section. Okay, in the normal comment section, let me know what should be the correct choice here. This is a homework question. Okay, this is a homework question for you guys. So thank you so much guys. मिलते हैं किसी और सेशन के अंदर. बाय बाय, टेक केयर. और अब जितने भी सेशन है, अगर आपने कोई मिस भी कर लिया हो, कॉमर्स एंड अकाउंट्स का और कंपनी लॉ का, कॉस्टिंग का, तो डेफिनेटली आप उनको वापस रिविजिट कर लेना. ओके, एंड आई एम ब्रिंगिंग अ प्रिपरेशन स्ट्रैटेजी वीडियो एज वेल फॉर PFRDA एग्जामिनेशन, specifically for PFRDA students, tomorrow at 2 PM on YouTube. Okay, so see you soon guys. Bye bye, take care. Thank you so much.